most negative month, or one of the most negative months of the year as far as stock market is concerned. We've had a phenomenal week already. This is you can't see my chart. I'll bring the charts up in a minute. We've had a phenomenal week already. We had that huge sell-off on Tuesday. Massive tank. Nasdaq was down 5%. Worst month since June 2020. It's all about the yield curve. It's all about inflation. The 2-year US yield curves at 2 years at 383, 385. The 2-year yield, and that's really what's driving markets. We've got massive dollar strength, and so the story continues. You had this minor rally. Retrace for stock markets, and that's all sort of given up the ghost at the moment. Gold, which is what the chart is I'm looking at here. Let's bring that up. Bring me back. Get rid of me. Bring up the chart. There we are. This is the gold chart on the daily. It's a bit messy there because it's a 1-hour chart, but you can see we're at a key level, 1680 for gold. Mohammed, good afternoon, sir. Hope you're well. You're first here. So welcome, Mohammed. Gold here. This is the daily chart, guys. Gold, that's the blue line there is that 50-day moving average. The red line is the 200-day moving average. And the grey line here is the middle of the Bollinger Band. The Bollinger Bands are pointing down. They're sloping down. We had a rally to 1725 that didn't break. As you can see, I'm zooming that up. You can see the resistance here at 1720. So 1, 2, 3, 4, 5, 6 days. We peaked through it on an intraday basis, but on an end-of-day basis, we couldn't break it. Big down day on Tuesday, and we followed through Wednesday, and we're down again today. 1680 is an absolutely key level for gold on the higher time frames, and we'll see where we go from here. But that's gold on those higher time frames. No doubt we'll come back to it. There's the big sell-off we had on Tuesday, that big down candle. Remember the candle body, the size of the candle, the body of the candle is absolutely fundamental here. Emphasised quite significantly here on that 1-hour time frame, and even as we saw on the daily time frame, this was Tuesday's big down candle for gold. So good afternoon, everyone, or good morning, good evening, wherever you are. Mohammed, let me know if you want to have a look at anything. Technically, we've got some key data again coming up in about 5 minutes. We've got the retail sales numbers. Consumers seem to have been holding up. Some retail sales numbers have been quite good around the world, but we'll see what they're like out of the US. We've got the key manufacturing area, Philadelphia, the Philly Fed manufacturing index as well at in 5 minutes, 6 minutes. And also the weekly claims. Remember, claims, there's lots of chatter that the Fed are now looking to let unemployment rise. So we'll see what these weekly claims are like. They're still very tight. It's a very tight jobs market. Weekly claims expected around the 225,000 mark. That's a really low number, even for economic cycles. So we'll see what that comes in at in, I say, 5 minutes. Empire State. It's Empire State, not Philly. I've got Empire State here. Not sure what's correct there, but anyway, a recovery from minus 31 last time. But we'll see what the data actually shows us. If we'd been betting ahead of the data on Tuesday, we would have been burnt quite significantly. So gold remains down. Let's have a quick run through the charts. Aussie remains down. We had some weak. This is the Aussie on the 1-hour time frame. Jobs numbers. Sterling remains just above that or under now 115. 115 absolutely vital for sterling traders. Samuel's asking about sterling. BJ, good afternoon. Samuel's asking about sterling. You can see on this 1-hour time frame, Samuel, it's trending lower. The Bollinger Bands have been sideways today and most of yesterday after this big leg down here on Tuesday following the CPI, the inflation data out of the US. We've got a flat 200-hour moving average. The 50-hour moving average crossed the 200-hour average earlier today. That's a negative death cross up on the daily time frame. It's not great in a intraday time frame, as you can see. The MACD signal line remains flat today, but it was signaling that, and the histogram, as you can see, hasn't been above zero since earlier on Tuesday before we got the CPI data. PPI yesterday out of the US is a wee bit better, but we had a bit of a lift for sterling. Couldn't get over the 50-hour moving average. Did break the 200-hour, but it's negative. It's drifting lower. Here we are at 14 79. Going forward today, I've got a line here at 1450. That's the next big round number, just 25 pips away. So it's trending lower. It's been the under half of the Bollinger Band all day today, and it's sort of hasn't been able to get up, as you can see here on the 1 hour time frame. It's not great. There we are. It's a bit more aggressive. There we go. That's the 1 hour to the downside, Samuel, my friend. I don't know what time frame you're trading, but do let me know. BJ, good afternoon. Please let me know how you know today's news release. Well, it'll be out in a minute. Forex Factory is a good place. Have a look on our calendar as well, BJ, on our website, hfm.com, and look at the daily calendar. You know, if you're going to trade intraday, guys, you do need to be aware of what the main data news is. 3:30 server time is when most of the US news comes out. On the main 8:30 New York time is when the main data comes out, and we're still 3 minutes from that, so we'll come back to that in a minute. That's where you get it from, VJ, my friend. Where can I get news today? Well, lots of free news sites. Yahoo.com is as good as any. Obviously, if you want some business, have a look on the business section or the finance section. Obviously, have a look at our analysis page. Always up-to-date news on there. News all over the place. Reuters.com, Bloomberg.com. There's lots of free stuff. You have to subscribe to some of these channels, but if you're serious about trading, VJ, you know, you need a smattering of what the news is going on about. How will the core news release affect gold? Well, you've asked that, Anthony. Gold, you know, is weak. This is the daily time frame, so we're into our third day down. 4 hour is emphasizing that even more. So there's that big down candle from Tuesday. So we couldn't break over that 1725 resistance area. This is the 4 hour, which is showing it on the 1 hour. On the daily, you can see little fractal highs there, and that's been trending lower ever since. So unless there's a big surprise that's negative for the dollar, which would mean weak retail sales figures, this is still trending lower in the 4 hour time frame. Intraday, 1 hour, it's been sort of level-ish yesterday after the big sell-off around. It held 1700 for most of the day yesterday. But interesting, it closed weaker. So, you know, here, these moving averages are all trending lower. They're moving down. So that's, short positions under the under half of the Bollinger Band yesterday here on this 1 hour time frame. Anthony, there, that's that break into the bottom. So we were flat, then we start to move down. You can see them moving down. So that's moving down, my friend, to the downside. Really hope gold will go up soon on the news release. Well, we'll see. It's under a key level, 1688 and 1680 are two key levels from earlier in the year on an end of day basis. So here intraday, the fact we're under 1688 isn't too much of a worry if you're bullish gold. But at the moment, the trend is very much to the downside. And again, I don't know what time frame you're trading this, but as we said earlier, you know, look at what the higher trends are doing. The daily is very much down because we've rejected 1725 here from that test, 5 6 days. Big down day on Tuesday. We followed through yesterday, and we followed through even further today. So this might be the three big, move down. But, we might find some buyers down here. 1688, as I said, was key. It was a low for September here on the first day of September. We go to the left here. This is taking us back into July. So it was August was fairly positive to start off with. Then it weakened, gold market. So 1688. And then this low here, I'll just pull this down now. You see this low took us to the key 1688. It was an intraday test here in July. But if we go up, if I zoom in a bit more, keep watching this bottom line here, this thick bottom line here. See, 1688 was a key. It was a key support way off the. If I go up to the weekly, let me just. Anyway, so 1680 here is around an 88 is so important because it's the 200-week moving average cloud. Okay, that's why that's 1688's key, and 1680 is the big round number below it. And again, this is weekly, remember, so it was a weekly low, takes us all the way back here to March and February of last year, 2021. So it's a major level. So 1688, that 200 I'm zooming this up, that 200 moving average on the weekly time frame. So we're at key low levels. We may bounce from here, but at the moment, here intraday, it's trending lower. It may bounce on the news. Let's have a look at what the news is saying. So remember, we've got retail sales. The core number is the most important one, and that is weaker. It's coming at negative 3.3 of 1%. Empire State is better than expected. It's coming at a -1, not -12 or -31. So manufacturing is showing some signs of coming back, as President Biden was banging on about yesterday when he was over in Detroit. Headline retail sales also better than expected, also better than expected, 0.3 of 1% compared to a negative expectation of a 0.1 negative. So retail sales is better than expected. The core is worse than expected, so it's a bit of a mix. And Empire State is much better than expected, but that's the least of the significant data today. Again, we've got another tight jobs number. Jobs have come in, the weekly claims have come in at 213,000, much better than the 225,000 expected. So there's still signs of life in the US economy, and it's still a very tight jobs market. And import prices are also better than expected at -1% rather than -1.3%. So overall, that's actually quite bullish for the US economy, that number. It might be negative for the dollar. So dollar might have taken a bit of a hit. So let's have a look at the euro on that. And indeed, the euro is starting to tick up a wee bit, but we're still very much anchored under under parity here. We're at 99.09. So dollar has weakened on that set of US data. Dollar guppy. Let's have a look at the guppy. Guppy's been very volatile. Again, there's been lots of chatter this week. Let me go to the daily chart for the guppy here. So the sterling's come to life in August as the yen has suffered a horrendous sell-off. So we got to 176.50 earlier in. No, we didn't. I thought we had got 176. Well, we'd got over 176. We got over 176, haven't we? So we got to. So that's 176.00 early in the week until we had this big turnaround there. So there's rumours, and I'm sure you're aware of, Armia, that the Bank of Japan rumoured to be starting some sort of intervention, certainly against the dollar. Where's why can't I see yen here? 145, but Guppy's had a really strong run at the beginning of August, but it's coming off quite significantly. This is the daily time frame. So yesterday we came back under the 5-period moving average. That's the 9-period moving. So it's still relatively big, and we're in the upper half, but it's had a move down. So Mia, what time frame are you trading, my friend? Let me know what time frame. But here, sorry, that was a daily. So here, the daily is rallied into this, couldn't break over, nicely demonstrated, or better demonstrated in the 4-hour chart. So again, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, 3 fractal highs, couldn't break 176 on an end of candle basis. The 4-hour high was around about 166.70 here, and then it's triggered lower here. When was this? This was yesterday at 4 o'clock in the morning, and it's moved lower still. It's run into the 50-period moving average in the bottom of the Bollinger Band, so it's found a bit of support here. But then we got another current candle moving lower. It's still got 25 minutes to conclude this candle, so we can't make any decisions yet. But that is looking quite bearish, isn't it? But we're still, this 4-hour strategy would have been short here from yesterday morning, and it's still short. Having breached under this 50-hour moving average up here. So coming closer to home, the 1-hour time frame looped down into the, interesting, we got the, let me just get rid of, leave on that. Interesting, we got the 50-hour moving average here, and this red line is the 200-hour moving average coming up, creating a wedge, a triangle as we've moved down. So obviously, a break of either of those is quite significant. They're out of sync, which is not great, but we have got 50, 20, and 200 here. So we're under the 200-hour, we're under the 20-hour, and we're under the 50-hour. So although they're out of sync and they're unaligned, it's still negative. So 164.86 is where we trade at the moment. You can see these fractal lows through here has found some sort of support around about here. So 164.70 would need to break these three fractal lows here. Remember these inter-hour candles. So that would be perhaps your next target to the downside. We're pushing the Bollinger Bands wider. As you can see, the bottom's going lower, the top's going up. So we're sort of widening the beak of the Bollinger Band, if you like. It's widening, haven't been sideways for most of the day, but we're down to our day lows at the moment, 164.80, so it's pushing it. MACD remains negative. Looked like we were moving up this morning into the top of the Bollinger Band, rejected the 50-hour, rejected the top of the Bollinger Band, and then 2 big hours down, and now we're under this 200. It's unaligned moving average, but we're biased to the downside. So maybe some buyers down here at this 164.70 level where our fractal lows from yesterday and today are. So that's still biased to the downside, Amir. That's yen receiving some props in some bid, but sterling's weak, yen's both as weak also. So there we go. G Junior, Mocha, we had a look at gold, but I'm happy to have a look at it again. I didn't see your comments if you only just joined us. Gold remains weak, my friend. It's had a bit of an uptick on the data, but we're still weak. 1688 is a key level, and 1688 is 80 itself is even a more key level, if that makes sense in English. This is the 1 hour time frame. It's moving lower. The daily remains very much to the downside, having rejected this 1725 earlier in the week. 6-day rejection. There we are. 1, 2, 3, 4, 5, 6 days. Big down day on Tuesday. The big shift in sentiment on Tuesday. And Mia, you're asking about 4 hour. Hopefully I covered the 4 hour for you, Amir, on pound yen. If not, I'll go back to it after this. After Rojoka's asking about gold, but gold looks weak. This is a daily. Obviously, today's candle isn't complete, but that looking quite weak, isn't it, after Tuesday's, and then the follow-through sell-off yesterday. 4 hour, still weak, trending lower, and the 1 hour today, as we saw earlier, sort of having broken out of that range we were in from the big sell-off on Tuesday, following the CPI data, the inflation data out of the US, holding 1700 for a day and a half, and then we breached it into close yesterday. It's a significant time when we actually broke that 8 o'clock time, under 1700 into close, and then we've legged down again this morning and today and this afternoon ahead of US Open in under 1688, and 1680 is next big support. So it's not moving with big candles on an hourly basis, but it's still moving to the downside. London MUFC, good afternoon. Hope you're well. United not play tonight, don't they? I think it's the Europa League they're in tonight, isn't it? Amir, did I check? Tell me, my friend, did we cover Guppy on the 4 hour? I think we did, didn't we? Let's have another look. Anyway, Guppy 4 hour is your trading time frame. Well, the 1 hour is down, so the faster time frame is moving down. The 4 hour, this looks like a big down candle, does it, on the 4 hour? And the daily time frame, as we said, it's rolled over significantly on Tuesday, and interestingly, went even lower on all this gossip about the Bank of Japan intervening to support the weak yen yesterday, and we're down again today here on the daily time frame. So your trading platform or your trading time frame on this particular setup here, where we've got these crossing moving averages, the green line is the 5, the 9 line is the orange, and the grey line is the 20. So the 5 has crossed under the 9 here, and we finally had the trigger to go short with this strategy would have been here on this candle here, as it's broken into the underside of the Bollinger Band. See the rejection of that 176 level, very, very clear there. On an end of on a 4 hour basis, so that would have gone short here. There at 65.71, and at the moment we're 80 odd pips into the good, 0.5% lower than we were where we started at 64.91. So we're under 165, which is quite key as well. And this is looking relatively weak as well as the first sign of suggestion that we may be low. Look at the size of that candle. It's obviously still got half an hour to complete, but it's significantly bigger than what we've had after similar size to the initial break up here of the rejection of 176. So that's looking like quite a negative candle. But again, let's not make any decisions till it's complete. If you're a 4-hour trader, Amir, but that looks like you could possibly add to your short position if you've been short from this. That's what I'd be looking to do on that. I would think, that's what that's indicated. I can't give you any advice what to do, but that's looking a biggish candle compared to what's going on. But no decision until it's complete, and still 15 minutes to do that. What time is the news, Johnny? The news was 12 minutes ago now, and it was a bit mixed. The core sales missed expectations, but the headline retail sales was better than expected. Philly Fed was better than expected. No, it wasn't. It was worse than expected. And Empire State, I didn't realize Empire State was out today as well. But anyway, Empire State manufacturing and Philly Fed manufacturing. What does that mean, Empire State and Philly Fed? These are the New York State and the Philadelphia State, two key manufacturing areas in the United States, in the northeast of the United States, two key manufacturing areas. So it used to be 20 or 30 years ago when I started trading, these were key manufacturing hubs for the US, and it was a key piece of data. They're not as significant as they used to be. Here on my calendar, Empire State is a high impact and Philly Fed is only a medium impact, which is probably still fair. But anyway, there's mixed data out of those two bits of data. But probably what's grabbing the headlines, I can't see my feed at the moment, is the weekly claims. It came in at 213,000. So that still suggests we've got a tight jobs market. So that's pushing the Fed still to this, or might be tweaking the idea of 100 basis points, a full 1% rise in interest rates out of the Fed next week when they announce on the 21st of September. So that's adding to a dollar strength. I've said all that. Let's look at what the dollar index is doing. It hasn't actually moved very much, has it? It's rejected. This is the dollar index. Remember, this is a composite index of 6 major currencies compared to the US dollar. And as you can see, the US dollar's biased. It's up. It's very strongly up here. Big strong up day, having moved down for 4 days on Tuesday on that inflation data. So 108 support here on the daily time frame. 110, 20-year highs is resistance, and we currently trade intraday today at 109.50. 109.55, the two lines here. This is the bid and the ask price on this particular chart. There you can see the difference. Lots of people are asking me about why did I get stopped out, and why didn't my take profit get touched when we had this massive move on Tuesday. Well, you've got to remember the spread, guys. If you're going long, you buy at the top, and you need the bottom line to get to the top, like where you got in before you start making a profit. So remember the bid and the ask, bid and offer. Make sure you understand what that is, the spread, and make sure you understand what that is on your chart as well when you're looking at your charts. Okay. Johnny, that was the thing. London, I've just been through gold again. Hopefully you saw that. I hope you do. US 32. You got this, says my friend Eddie. One tries, Eddie. You're a better technician than I am, my friend, but one tries. This is the futures chart, London, for the USA 500. Again, what time frame? You did ask. You didn't see. You haven't actually put a time frame on here, my friend. But let's start with the. Actually, let's go up to the daily. We'll see the shock that was Tuesday. Okay, look at this. This was a huge 4% decline. And I always say, well, everybody, it's not just me, but size matters when it comes to candle recognition, guys. And look at the size, look at the big candles on that chart. We had some big up days here at the end of May. We had some big down days, gaps down here at the beginning of June. And then we started to rally. The blue line here, this was 15, 16, 17% rally we had. We went through the 200-day moving average here. That looks fairly, on this day here, everything was looking pretty hunky-dory. We were outside. Yesterday we were on the edge of the Bollinger Band, but we'd been there for a while. We'd broken over the 200-day moving average on the 15th of August. 16th of August, buying followed through. It looked pretty hunky and dory, didn't it? But it was on low volume. It was the middle of the summer season. It was the middle of August, and what happened? Well, we retraced, and we retraced really aggressively. So, for this a 50-day rally, a 20-day rally, we shook it out within 10 days, and we were back to where we are here at the middle of sort of here after that, 31,000 level. Back to the mid-July, mid-summer sort of level. So 31,000 is a big support level, MUFC for the Dow. But again, look at this. We were up 1, 2, 3, 4 consecutive days. Again, it was looking relatively positive. We'd retraced a bit of this leg, but we'd, if I put a little Fibonacci on here, so everybody thinks Fibonacci is made up, but it is what it is. The levels are not. I mean, it's not magic, but they're key levels. This one's actually got the 88.6 on. I don't know if it's got 88, but as you can see, we'd rally. This is the big down leg. How much did we rally to? Well, we couldn't get over 0.5%, so 50 held. We spiked to it, and then we just crashed through that. So we're biased to the downside once again. We haven't so next level we'll be looking to retrace this and see what happened here. We followed through here. Here, big candle momentum carried on. It retraced, and then it went up here with the move down. Much more aggressive to move down. So we moved up slowly, 20 days, and shook it out in 10 half the time. Then we looked like we were retracing again, and then bang, a big move down. So stocks remain very, very weighted to the downside. Pressure remains to the downside. He's trading a 4-hour time, right? Okay, let's have a look. So that's the daily. For me, we're under the 20-day moving average. So at 32,000, the 50-day moving average is at 32,200. The 20-day has crossed through from above to below the 50-day moving average. The blue line is the 50-day moving average. So that's a negative factor. Obviously, Tuesday's huge sell-off has added to that. But the 200-day is all the way up there. What we have now, though, from Tuesday's sell-off is that we have the moving averages aligned. So the 200-day is all the way up there at 33,400. The 50-day sits there at that 38.2 fib level at 32,200. And the 20-day now is down here at 32,000. So they're aligned, 200, 50, 20. Next support is this 31,000. If it breaks, there's a bit of fresh air down to this June low here, or July low. Sorry, we've got the June lows. Sorry, this is, it's the June low I'm talking about. Looking at a different chart. So this June low is what lots of players are looking at, 29,600. So we're biased to the downside here on the daily. Your trading time frame, London, or London, it was relatively okay. So we bounced yesterday from this low, but then we've shook out here this morning, and it's had 3 huge down candles. So we're consolidating ahead of the cash open. Signal line is still negative. Stochastics, very fast moving. Stochastics moving up. Looks like maybe moving up. But the 50 period moving average is there at 31,600. The 20, the midline of the Bollinger Band, is there at 31,600. As you can see, well, it's not going to happen. But that's looking like that's going to cross from above to below, isn't it, in the next few candles? So, I'd be looking for short positions on this. It's negative. It would have been short here. We'd gone long here potentially, but certainly it's biased lower from this big candle here from Tuesday's shock CPI number here. So we've gone down, consolidated for now, tested lower. It doesn't really want to go lower, does it? We'll see. I mean, there's a lot of. That was an overreaction. What you would argue, a huge, 4 or 5% sell-off in the stock market. So there will be some retrace, which is what we had yesterday, basically from Tuesday's. Sorry, hang on a minute, I'm getting wrong here. No, this is it's 4 hours, isn't it? So this was Tuesday's sell-off from the brief rally up. So remains to the downside, I'm afraid. So at the moment, it's a bit directionless, to be honest, here on the 4-hour time frame. Your resistance here is this top here at 31,600. Support is the bottom of the shakeout at 31,000. So it's quite a big range there. And at the moment, it's not trending. I'm a trend following sort of guy, and that's not trending. That's just squidging sideways, but it's biased to the downside. If you follow me London London, I should say. Thank you, Addy. That's your 4 hour time frame. Right, interestingly, there's nobody here from Facebook. You're all from YouTube. So we've been using this software that's supposed to bring in lots of our social media platforms, but it looks like everybody is here that's from YouTube. So something's not working. There's no Twitter followers, there's no LinkedIn followers, and there's certainly no Facebook followers. But anyway, let's have a look. No problem, my friend. That's what I'm here for. Remember, this London goes for everybody. You know, this business, this trading business, is a mindset business. You know, it's a mind game. More importantly than the charts and the economic releases, it's accepting yourself. It's accepting that you lose a lot more than you think you're going to lose when you start this crazy business. But if you understand the basics, you understand the leverage, you understand margin, you understand how good and bad that can be, but you fundamentally understand yourself first and foremost, that's when you can really move forward. If you don't get yourself, if you don't realize that it's what your risk profile is like, how emotional you are, the fact that your ego doesn't matter, it doesn't matter what you think. It's irrelevant. The market does what the market does. The market is always right, whether it's wrong or not wrong. It does what it does. It goes up, it goes down, it goes sideways. That's all it's done throughout history, and that's all it will continue to do. Markets don't change, people don't change. Technology changes. Spreads tighten up. Cost of trading becomes much more accessible to ordinary retail traders like ourselves. But basically, markets move in waves. They move in steps. They do what they do, and you just want to catch a little bit of it. When you're long, be long. When you're short, be short. And trust your systems, trust your strategy, trust your approach, whatever it may be. And fundamentally, number one, trade the time frame that fits your lifestyle, that fits your personality. There's no point trying to be a scalper if you can't cope with the rigors of changing your mind or following the system in and out very, very quickly. You can't accept just taking a few pips here, a few pips there, a loss here, a loss there. The intensity of trading on an intraday basis. Equally, if you feel like your personality needs the excitement, for the sake of a better word, of trading more, there's no point trying to trade on an end of day basis. You're only getting one or two trades a week because that might not, fulfill what you want it to fulfill. Your account mightn't be able to handle huge targets, huge stop losses. But again, number one story really: keep your losing trades small. Lose small, win big. It's that simple. So you can have lots and lots and lots of losing trades, but a few big trades can more than compensate for it. It's just whether we can deal with that psychologically. Okay. More on that in my webinars when I talk about this an awful lot. So anyway, back to the charts. Somebody's asking about cable. Cable is at a key level. Frank Line, 115. This is cable on the daily time frame. So again, another one that's biased to the downside. Has been all year really. If we go to the weekly, this is the weekly time frame. Don't fight the trend. This is 2022 and 2021. 142 was our high here in the spring of 2021, and it's just unwound all the way down, hasn't it? It's been a brutal 2022. A strong dollar, a weak sterling, new prime minister. All sorts of other things going on. But here on the weekly time frame, those moving averages are very negative. That's the 50, again, nicely aligned, 250, 20. The death cross here on the weekly for cable took place round about here at the beginning of the summer. Big down week here, the middle of August, where we couldn't get over 120. 120 is a fundamentally historical level for cable. And we've gapped 500 pips from that down to another historical or key level at 115 at the moment. Now, we've even been as low as 114. So the trend remains to the downside. Many are talking about 110 for cable if the dollar strength continues. It's going to get to, it's a very, very crowded trade, long dollar, but, money is being made on it. So don't fight the trend. That's the weekly. That's the daily. It's still down. There's 120 from August. There's 115, which is where we hold at the moment. And there's that 115, 114 level, which we spiked to here at the beginning of September. Big down day for cable, like all the other dollar crosses on Tuesday, because of the strength of that CPI number. Markets expecting 34, 36, 37% chance of a 100 pip increase in US rates next Wednesday. It's dimmed a wee bit now, I think. That data today won't have eased that at all. I'd be interested to see what the CMC, let me just work that out, CME group, Fed Watch 2, let's have a look at that countdown on the Fed. Where that sits at the moment. We went from like a zero chance of 100 data points rally back in just on Friday before the data came out. There's a 22% chance now of 100, so it's dimmed. That's cooled quite significantly. Yes, that was yesterday's close, wasn't it? Yesterday's close. But a 78% chance of a 75 basis point. So basically, 75 basis point is priced in, but not nailed on. I mean, the bears could get a grip, but that weekly claims, interestingly, remember, they meet on Tuesday, Wednesday, so that's the last weekly claims number, and it remains strong. So that'll play into the centrists, the dubs. There's no dubs left on the Fed, but those less hawkish than other members. Anyway, sterling. You were asking about sterling, Frank Lang. I got distracted, which is my want, unfortunately. So daily's down, weekly's down. 4 hour. What do you think the 4 hours doing? Well, it looked like it was rallying here on the week. We had this big announcement on for inflation, US inflation, and we're up and down, and we're down again. So 115, we're back over 115 at the moment, 115.50. So we've had quite a good 4 hour candle. There's a big long wick that's rejecting that low, isn't it, on 4 hours? 1 hour still biased to the downside, although this current candle here that's just about to close in a minute, that looks relatively positive. It's gobbled up the last 2 hours of action, certainly. So a positive, a weaker dollar on the data, but ultimately still as a 1 hour trader, that's still short, isn't it? It may be looking to stop out if it breaks over this. It's one way of trading this strategy, but again here for 1 hour traders, this strategy would have triggered short. Not there. It's crossed there, and it would have on close yesterday, basically. You would have gone short here on open this morning. Stop loss would initially, I'd have had it around that 200 hour and then been moving it down. But it's leg down, retrace, leg down. It's retracing again at the moment. So, but that's still short here on this crossing moving average strategy. We've been all the way down here. We've been at 70 pips here, 600 points, 6%, and we're back to 0.41%, back to 445 pips, but that's still short. Again, depends where your stop loss is now. It might have brought it down here, but wherever it is, that still looks short to me. Frankly, on the 1 hour time frame, 30 minutes. Bit different, big turnaround at the moment, but still hasn't crossed. We haven't had these moving averages cross to trigger a closeout. Closeout is short, but not to go long. Certainly, we'll see how that finalizes as the 1 hour. So that remains short here to the downside. 115, absolutely key for cable. Dollar CAD. One Don's asking about dollar CAD. Again, 4 hour, my friend. You asked for 4 hour on the was it the Dow? I think it was the Dow, wasn't it? So let's just go back again. Same story. Obviously, we get the same huge candle from Tuesday. So it's been biased higher anyway. Dollar CAD on the weakening oil price. Remember, the US oil went to $90 and rejected it, and we moved down quite significantly. So again, a huge a huge candle here on Tuesday. Look at this, completely engulfing all this previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 10 candles, all engulfed on Tuesday's huge up candle to 131.70. So obviously the next big line in the sand for dollar CAD sits at 132. Let me just put that in there at 132. And you can see if I take this up, no, it's the wrong one, it's that one there. Okay, it's that one there. If I take this up to the weekly chart, you'll see where 132 sits as a key level. So that's the daily. The weekly 132 is off the charts, isn't it? So monthly, still off the charts. Well, not quite, but I didn't move it, did I? Right, so our 132 level goes all the way back here to November 2020. So we're at 2-year high for dollar CAD, over a 2-year high at 132. So again, that's bid. Weekly's bid. Daily is biased. The upside still bid, or was it moving down? It moved into the now, but it hadn't done that since the beginning of period says. Hadn't done that since late August. So we're bid 132 to the upside. 4 hour again strong from Tuesday. Struggling to get to 132. To be honest, that's a key resistance. So it may be looking to turn down from here. But at the moment, because of the CPI number from a technical point of view, that's a real rally. So 132 is resistance. Support here is the 50 period and the 20 period coalescing here at 131. Then we got the 200 hour or the 200 period all the way down there at 129.80. So 129.80 initial support, lower support, 130, 131, and 132's resistance, and we currently trade at 131.70. So we're still biased to the upside. Dollar CAD, it's above its, obviously it's 50 and 20 hour moving average here, and it's also above its 9 and its 5 moving average. So it's moving higher, but these candles are smaller than this. This move down we had yesterday. Is that yesterday? It's a 4 hour candle. That's why. Yesterday. So we need to break. First resistance is the close of those two candles there at 131.80. Then 132. Support initially round about there, 131.50, and then the big support here at 131. See if it retraces any of this move up. It may do, just like we moved down, but it moved up very aggressively. So it's still biased to the upside, my friend. Bagus Arrows, MF Mata app. Bagus, I'm not quite sure what you mean by that. We've sort of soft launched a new app. There's some bugs in it. We're fixing those, and that's about to roll out again. So we're very happy about it. It's a great little app. Somebody must be asking about gold again over on either Facebook or Twitter or something. But let's have a look at gold again. Right, let's just go through gold again for whoever you are, my friend, and then we'll come to Aussie Kiwi for Matteo. 1680, 1688, and 1700 key levels. Remember those numbers: 1688, 1700, and 1680. The round number here. We've been down to 1685 today. We sort of moved up. So this is the gold on the. Let's go back to the daily time frame. So there's that 1700, the big thick blue line here. 1725 on the daily time frame was rejected on an intraday basis, and we couldn't close above it on an end of day basis for 6 days here. Tuesday's big sell-off, the resurgence, the bid on gold on dollar had a major move. We moved over $20 on Tuesday to the downside. We breached 1700 yesterday, and here we are testing these down levels, these 1680 levels. So gold is biased to the downside on the daily. on the 4 hour and on the 1 hour. But we've found some support around this 1688. Volatile last hour. We're into the new hour now. So interesting, we may have found some sort of floor here at 1685. We didn't actually test out at 1680, but we tested as low as what's that low point there? 1683. So gold remains biased to the downside. But you can see really today, it's been a bit of a consolidation at the moment. To break, if this is going to move higher for the US session, which kicks off in about 20 minutes, we need to break over the 20 hour, which is at 1691.76. And to break lower, I'd like to see that at the bottom of the Bollinger Band, retesting this 1683. So 1683 is support today. 1691 is your first resistance, and with the bias to the downside. MACD is negative. Stochastics is flat and neutral, but sort of rising, and the ATR is about 33 cents on the 1 hour time frame for gold. Meteo, not Meteo, somebody over on Facebook, I can't see your name, so I apologise. Meteo is asking about the Aussie Kiwi. Mixed data from those pairs overnight. We had a big surprise for GDP from New Zealand. Excuse me a minute. A big surprise from GDP from New Zealand overnight. Came in at 1.7% compared to expectations of 1%. And then we had some weak Australian employment data, missed expectations. Unemployment went up to 3.5%, still very, very low, obviously, but 3.5% from 3.4%. It's one tick, and 33,500 was the new jobs created compared to 35,500 expected. But obviously, it was much better than previous months, which saw a decline of 41,000. So overall, relatively positive. Obviously, Aussie data as well, but not as good as the New Zealand data. So the result of that, I don't know if I've got the Aussie Kiwi here. Let me just find it. Aussie Kiwi. Let me just bring it in on one of these other ones. Let's bring it in on this one here. Aussie Kiwi. Aussie Kiwi for Meteo. Again, my friend, I don't know what time frame you're trading this, but see, we got a yellow line here on this south. So let me just go. So this is earlier. We had it sort of cancelling each other out basically. So 125.75 has been our recent high. Let's put that through here. 125. Actually, let's bring it out down to 125 itself. Go around number. So there's 125 for Aussie Kiwi. So a high here from Tuesday was a high here today, 125, and it's been lower since. So it's broken under the Bollinger Band. But again, the Bollinger Bands are relatively flat. It's sort of angled up Monday, Tuesday. Then we got sort of gone sideways. So there's not a lot of direction. We're sort of moving. Take the short up here. It's moving down. Looks like it's pressured. 122 is next support through here. Our low today on the early news here under 122 at 121.60, but the hour candle closed around under 122 as well, so that's interesting as well. So 122, we trade at 122.25 and then at 121.86 is our support, and yesterday's low sort of scattered through here at 121. So 121.04. So 120 is obviously another key support area. Move that down there. There's 120. There's 120 itself below that. So it was above that. So that's 120. That's 120. Look at that in there. That's 120. That's as good as there's 122.02. So that's 122. There's 125. So it's biased to the downside here intraday. What's the high time frame? Well, the 4 hour still looks relatively well bid with that support right on this 122 where the midline of the Bollinger Band is. So support, as you see, the actual support is a bit lower than that 121. That was that 121.80 zone. Here, 121.60 zone, in fact, on this 4 hour time frame. Let's just change that object list. That last one I just put in, make that a bit dotted. What's that? 121. Call it 50. 121.50. 121. It's actually a support hour on the 4-hour time frame and close. And the daily again remains biased to the upside. We're in the top half of the Bollinger Band. We've been testing this 125 level intraday. We haven't been able to close it. Our closing high for the day was yesterday, in fact, which is interesting, which took us to 120. What am I talking about? 120. It's not 120. It's 112.35. Sorry, excuse me. To the upside. So that's, the Aussie is outperforming the Kiwi, even though the Kiwi data was better this morning. There's that jobs news. So the 20-hour midline, the Bollinger Band, held from a charge into close yesterday and earlier on today. They've got a move up here. Is that the data that came out? No, that was. Hang on a minute. What's this? It's the daily time frame. So you're not jump. In the week, I've got these the wrong way around. So this is the daily. I've done this the wrong way around. So I've got up to the daily time frame. So let's come back again. So daily has resistance at 112.50 intraday, but on an end of day basis, 112.35. 4-hour, there's that 112.50 area. There's 112.35, and support on the 4-hour sits at 112.15. Above the 112 round number, and we currently trade at 112.25, and intraday 1 hour we've come off 112.35, 112.20 is holding on 112.15. That low from the 4-hour is that's where that may be heading for at the moment. Matteo, if that's hope that's helped you. Carlos is asking about the Kiwi, the yen, I should say. Yen remains very weak, even though there's gossip about. Where's the yen gone again? Oh, I've lost it. So let's just bring in dollar yen. CST. There we go. Sorry, this is a different. Just different background, basically. It's got white background. We've still got the MACD, the stochastics, and the RSI on here, and moving averages. And this is the 9 and the 5 moving average here. The green line's the 5, the 9 is the yellow, and the 20 simple moving average is the midline, the Bollinger Band. That dollar yen here, I'm sure you don't need me to tell you, it's biased to the upside. 145 is a big line in the sand. Let's come on, change the background. Let's change the template. So we go back to the daily white. There we are. We'll come back to the white template. I don't have to keep changing my template. So 145, big line in the sand, big resistance area. There's a lot of chatter, Carlos, about the Bank of Japan intervening. That's 144.50, but we've been higher than that. 145. There's 145 at the top of the chart there. Big resistance. This is the daily time frame, as you can see. Blowout for July and August in particular. The period separates on. So big rally here in August, huge follow through so far in September. So we've gone from 131, which is a pretty high level anyway here through the summer. As we were ramping up here, June, July, we got to 138, and now we've blown out of the water really since then. There was that high here in July, and it just ramped through it for September. So weakening yen, it's starting to concern the government in Japan. It's concerning the Bank of Japan, but publicly they're still talking about their very accommodative policy. There are rumours and chatter that they're looking to intervene. Yesterday, we had this down day yesterday on Wednesday of chatter that they were out in the market looking for what levels were key. 145 looks like the big fat line in the sand. 140 was a level many thought we wouldn't get to, but we've just charged through 140 earlier in in the end of August, beginning of earlier this month. Let's put that on as a thick line so you can see it a bit better. Okay, that's 140. Let's make a note of that when I come back. Okay. So 140 was a big resistance area for this rally that had already been kicked off, but certainly off we go, and it's tight bias to the upside. Carlos, I don't know what time frame you're trading that, but look, that's the daily. It's very much biased to the upside. We've had a cross of the 50 period by the 20 period here on this big break of 140 at the beginning of the month. So that's still biased to the upside. We come down to the 4 hour. We've ran to this resistance at 145. Looked like we were weak. And there's Tuesday's CPI data from the US. Big bounce from the 50 hour. So again, if you're trading the 4 hour, that's your support level, the 50 period moving average. We're still currently above the 20-day moving, 20 period moving average. The Bollinger Band's now a flattened sideways, so there's a little less direction. We did shake out more than 50% of the big up candle here, but we've got support. So that's your support on the 4 hour. That currently sits at 143 on the screen. There we are. That stops it wobbling. Remember now. That's our support. That's your immediate support there, 143.25. And resistance is 144.50 for 4 hour traders through there, 144.50. And then the big round number above that is 145 itself. 1 hour time frame, Carlos. Nice move down, but again, here we're supported by not the 50 period moving average, but the 200 period moving average on the 1 hour time frame. So that's our significant support. So support here for 1 hour traders today sits at 142.93, so it's below the 143 level. The 20 hour, which is where we've bounced to now, 143.30. Resistance to the upside is the 50 hour moving average at 143.65, and then the top of the Bollinger Band just above that at 143.80. So still in the upper half of the Bollinger Band for most of today. See what happens as the US markets open and stocks start to move. Well, we're going to have another tick up today after that huge shakeout on Tuesday. We shall see. So there we go, Carlos. It's sort of sliding sideways today, but again, bias to the upside, dollar yen. I don't know what time frame you're trading, my friend. Do let me know. And I'm assuming your native language is Spanish, so if you want to listen to somebody talking Spanish, tune into our analyst in Mexico when he wakes up. It won't be long. He'll be back. And he talks in Spanish. Forgive me if Portuguese is your native language, Carlos, not Spanish. One should not assume anything. Who's next? Caracos is asking about Kiwi. Could we go further down? Absolutely. Kiwi, my colleague Addy, I don't know if Addy is still here, I don't know, wrote a really nice article on the the Kiwi this morning after or before the GDP. I edited it for him, I'm sure you don't mind. Following the GDP numbers. So again, big shakeout, obviously on Tuesday, sideways Wednesday, sideways so far today. But again, it's biased to the downside. So the stories are the same, aren't they? Any of the dollar crosses, it's a strong dollar. Don't fight the dollar. Fight the dollar at your peril, basically. So here, I don't know if you can see. Yes, you can. You can. So this is the 200. This is the daily time frame, 1 hour time frame, intraday time frame. So there's not a lot of there's no trends going on there. I wouldn't be really trading this as a trend follower because it's had a big shakeout. Thanks very much, and I'm probably still be short. But this is waiting to, if you can see that, it's waiting to break out. Okay, it's gone sideways up. But what are the key levels? Well, we're under 60, aren't we? Here we are. You can see. Hope you can see that. It says 59.95. That's a big level, dot 60 for the Kiwi. And the dot 60 level is all the way up here. We're just under it now, aren't we? Dot 60. There we are. 60.04, 60.03, 60.0. So we got it. There we go. 4. So that's dot 60. So basically, we crashed into dot 60 and we've been pivoting around that for direction. We didn't get any direction really from the Kiwi GDP, so the bias remains to the downside. If we zoom this up, you can see what's happened today. We've sort of rallied up on the positive news, but we've not got over. We got over the midline, the 20-hour moving average, but we didn't move above 60-20, did we? You can see that line there, 60, around about 60-20, 60-16. That was our high for an end of hour candle yesterday. And it was also the high for the end of hour candle at 60-16 today. So there's .60. There's that 16 pips higher, which we haven't gone, but also we haven't tested yesterday's low yet either today. And yet, in fact, we have. I'm proved wrong. There we go. So, in fact, I'm not proved wrong. It's today's low there. Intra hour, if you like, at 59.5975, which is the key level, which we did test on Wednesday. We haven't yet tested on Thursday, but we are under and breached the .60 level. So it's still biased to the downside. We're in the under half of the Bollinger Band, and we're under the 20-hour, 50-hour moving average as well. So the 20-hour and the 50-hour is also there. Carlos, there you see, you caught me out. See, assume nothing, ladies and gentlemen. What I was saying to Carlos, I assumed he was Spanish speaker or even Portuguese speaker. And where is he? He's in South Africa. So English is okay. So thank you for that, Carlos. Hopefully, we'll see you soon, Carlos. Take care, my friend. And I hope that was of some use to you. Meanwhile, where were we? We were with Caracasso and the Kiwi. Yes is the answer. Of course, it can go further down. It can obviously go further up, but anything's possible with charts. Anything can happen. But yeah, pressured down. So what do we say? Well, let's have a look at the daily time frame. So this is the daily. Big shakeout on Tuesday. The trend is very much down. We're very much in the under half of the Bollinger Band and have been since the break into the under half of the Bollinger Band here in the middle of the 17th of August. So from the 17th of August, the Kiwi, some of these high time frames, has been under its 20-day moving average. 20-day moving average is something I've always looked at, whether it's on the Bollinger Band, or just the simple moving average itself. We are now 21 trading days under the 20-day moving average. We are 18 trading days under the 50-day moving average from this big break here, the follow-through day. So if you didn't get short there, end-of-day traders would have been short here on the 19th, retraced a bit, but then another big down candle. Look at the size of the candles again on the downside. They're much bigger than the ones that are bouncing up on us. So we had a retrace this week, massive shakeout, and an even bigger candle. So the bias remains lower. So yes is the simple answer, and that's what at some point it will recover. But we're under 60. So let's go up to the next level, the weekly time frame. Where's our support on the weekly time frame? Well, this takes us back to November 2021, and we're at new lows, aren't we? So let's zoom in. What's it telling us? Where do we find support? Look to the left, 60. Where were we last at 60? We were last at 60 in the height of the pandemic here in April and March 2020. So next low here, as you can see on these weekly candles. Actually, if I zoom that up, I should be able to take that off. There we are. And I can actually take us in there. So let's just take that off a minute. We go over, take that off. So this is our pandemic panic, if you like. And we're at 60. Those lines are all a bit messy now. As you can see, we went here, next level here is 59.40. So 59.40 is your next down level on an end of week basis, and the week ends tomorrow, doesn't it? So here we are. If I go forward now. Here we are. Zoom up. At 60, so 59.40. So 59.75 and then 59.40 on the weekly time frame is support to the downside. Carrasco, my friend. Two down my amen. Oh, that's pretty good. Sifo, hi all. Good to be in the East. Can we please have a look at gold if we haven't already? We have had a look at gold, but if you just arrived, afternoon, Three levels to watch: 1700, 1725, or four levels: 1688 and 1680. They're the four levels gold traders should have on their chart. Let me show you. Okay, so daily time frame, like everything on Tuesday, it was a big shakeout. So 1700 is all the way, well, not all the way, it's just there now. Earlier in the week, we'd been having a look at 1725, but we couldn't break over it, CFO, on an end of day basis. So we tried it here 1 day, 2 days, 3 days, 4 days, 5 days. 6 days in a row, we'd had a go at trying to get over 1725. Yes, we did intraday, but on an end of day basis, we always closed below it. And then Tuesday was the big bang. We had the miss for inflation for the US, and we had this massive engulfing candle here on Tuesday. It took out 1, 2, 3, 4, 5, 6, 7 previous days action completely in the sell-off, the $20-odd sell-off we had on gold on Tuesday. We followed through yesterday, which critically broke under the psychological 1700 level. And then today, the follow-through momentum has taken us to some other key levels, which is 1688 and 1680. We haven't got as low as 1680 yet today, but that's a key level, and it's moving to the downside. So that is biased to the downside from a bit of consolidation above 1700 for a week or so. The 4 hour is very much the downside. There's that big shakeout and continuing to move down at 1683. And 1 hour remains biased to the downside as well, as you would expect. So those three key levels, 1 hour, 4 hour, and daily, are all in alignment. They're all lower. And the hourly candle, we had a bit of a shenanigans in the last hour on the US data. Wasn't sure. So big wick to the south, a big wick to the north. But here in this current hour, which is only halfway over, admittedly, we're still biased to the downside. US stocks are about to open in the next couple of minutes. So gold is pressured. Dollars come back. 1683 is where we trade at the moment. So biased to the downside. I don't know what time frame you're trading, my friend. Caragasso, thank you very much. I'm also in South Africa. I'm trading on a 15-minute chart, says Caragasso. Okay. So you're saying you want if you want to have a look at Kiwi on the 15-minute chart? Let's have a look at 15-minute. Obviously, 15-minute charts, everything can happen, much more volatile relative, but it looks the same, doesn't it? All the charts always look the same. You've got to look at this chart here. This is what MT4 is very clever at, sort of structuring your chart to the time frame that you're trading. So that's the daily, which we said was negative. Let's just go down. 4 hour negative, 1 hour sort of consolidating, isn't it, on this time frame? You'd argue there's consolidation. So Caracasso, you might be looking for catch the bottom and catch the top. So the channel here is around about 60.16 on an end of day basis and a low of 59.75. So if you're down here, you want to be buying. If you're up here, you want to be selling. So it's undulating, isn't it? So you want to be looking for pin bars at the top here. So on a 30 minute, it's still biased to the downside. Candles are a wee bit bigger. But still, there we are, still sort of undulating, still consolidating 30 minutes. And 15 minutes will be similar, but a bit more volatile. If we zoom in, so there's that extended. That was all of yesterday. This is the sell-off on Tuesday. This is all of yesterday. Tops and bottoms, tops and bottoms. But as you can see, the lows are getting lower, aren't they? Although it's channel bound, very much channel bound, the lows are lower than they were yesterday, aren't they? We're under this 59. But we've tested again this 59.75. That's a test, and then we rallied up. But again, if we zoom up now into what we're looking at, same setup. So the 200 period moving average for the 50 minutes held. The 50 period is down, and the 20 period is down. So we're aligned to the downside, aren't we? We're edged to the down. So some buyers down here at 59.75. We rallied up, but we couldn't. We ran out of steam very, very quickly. We ran out of steam within 2 candles, and it was retraced within 2 candles. So it's fairly volatile, but again, it remains biased to the downside, my friend. Okay. So that's answered your. Can it go any further down? So 15-minute CFO. No problem, my friend. We're here to help. I don't know if anybody's here from Nairobi in Kenya, or you can get to Nairobi in Kenya for next Saturday. We're running a seminar there. I think it's already way overbooked, but you might be looking to get get in. I don't know how we're going to handle it. My logistics and marketing friends will sort that out. But do come and join us. We'll be talking all sorts of things about market, all sorts of things about HFM. We'll be looking at trading psychology. We'll be looking at trading strategies. We'll be looking at some more advanced approaches. But as I said right at the beginning, this business is a mindset business, and I'll be investigating all things like patience and ego and discipline and all that sort of good things, and give you some ideas about how to try and deal with that sort of thing, deal with change, deal with the system, accept your losers, because that's really what this business is all about. So I've got no more requests at the moment. My hour is up, so I'm going to have a quick drink of water. Just have a look at how the stock markets have actually opened today. Yeah, Ray Delalio has just been replied. I don't think you can see this, my screen behind you. I don't think you can hear. Bloomberg just reported Ray Delalio. If you don't know who Ray Delalio is, go and look him up. But he's talking about a 4.5% interest rate top. We'll see another 20% decline in stocks. That's not, and that's coming from somebody who knows, has been in business a very, very long time. He's been profitable for a very, very long time as well. So 20% decline in stocks if the interest rates in the US get to 4.5%, which is what possibly we're looking at now from the dot plots from that CPI data. We've still got strong jobs. That was hotter again today. So the Fed have implied that they're happy to, not happy, but they're implied that unemployment will have to rise to get inflation down if they're going to fight inflation. Others are talking about, inflation is showing signs of topping out, which is a fair comment. It has cooled, but it hasn't cooled as quickly as many were expecting or hoping. We shall see. CFO, if you're talking about seminar, we will have face-to-face seminar. We will be in South Africa before the end of the year. I'm pretty sure my colleagues are organising that. So I hope to meet you. I don't know where you are, but normally we go to Johannesburg, Pretoria, Durban and Cape Town, possibly Cape Town. I'm not sure about Cape Town, but certainly I hope to meet you. If I haven't met you already, we have some really good sessions in South Africa. So we're here to help, my friend. I hope to meet you before the year's out as well. So what was I talking about? That was Kiwi. Let me just go back to the main player. Euro here on the 1 hour chart, just sideways. It's had a go over parity. We're now back down under parity as the stock markets have opened. Let me just go a quick check. We're down on open. The Nasdaq's down 0.7 of 1%. The S&P is down 0.45 of 1% off 17.8 points. The Nasdaq's down 81 points, and the Dow is best performance, only lost 0.2 of 1%, down 65 points. So it's a negative start for US stocks on Thursday, the 15th of September. As far as stock markets are concerned, ladies and gentlemen, we're coming into the most volatile or the most negative, one of the most negative phases of the year. The second 2 weeks of September is notoriously weak for US stock markets. The same for UK stock markets. I can show you a book today. I want to start talking about that. But the 26th of September remains one of the worst trading days of the year in UK, certainly. And as I say, the last 2 weeks of September can be particularly weak for stock markets globally. October gets a worse press than September does, but really September is a weak month for stocks. Why did Tesla stock fall that much? If you have time to spare before you go, Tesla is very much correlated to anything that Elon Musk tweets. There's a current, I'm sure you're aware, Musk offered to buy Twitter for best part of $44 billion, and then said he was trying to pull out. There's a whistleblower, i.e. somebody that works for Twitter, did some testimony to the US Congress. I don't know if I've got Tesla chart here. I'll probably find it. File, view chart. Let me see if I can find it. Cryptos indices. No, it's not. It doesn't look like it's here. It's not showing me. Tesla chart. So I'm reading. Click to add. Let's see if I can do that. Tesla. Law. Yeah. There we are. So this is Tesla on a daily basis. This is the here we had the stock split, so we makes it look more valuable or easier to buy as we'd rallied all the way to 900 here. Where's this? Yeah, this is the stock split. So here we are at 304. There we are. So big down, soon up. Daily. Let's go to the daily. That's the daily. For the 4 hour. So that's not. That's not a great chart, but because the stock split is still on the 1 hour. There we are. So 304 at the moment, and it was all to do with the whistleblower that had testified to Congress. Didn't actually say anything particularly new, although it was quite damning for Twitter. Didn't actually say anything particularly damning. It doesn't look like it's going to get Musk off the claim that he needs to go through with the purchase of Twitter. He's tried to move out of that, so he's countersued Twitter. Twitter sued him, and they're going to court. They're going to court in October, much more early than many expected. And much earlier than certainly Elon Musk expected. He wanted to plan his defence a wee bit. But the upper hand sort of sits with the Twitter board, you would argue, at the moment. There was always big questions about whether he actually really wanted to follow through on this purchase. But, he's the world's richest man. The guy has an ego. He is an absolute unique genius. You can't argue with that. But, he does things that many people find quite surprising. But anyway, as far as Tesla stock is compared, it is the premium EV electric vehicle company. He's over-delivered. He's delivering. Lots of criticism in the past, but the stock has rallied significantly over the years, and it's been very volatile over the years as well. Hence this big move down here we had on Tuesday. Obviously, that was a big sell-off we had on the stock markets anywhere on Tuesday, I will learn to click on the chart. And but at 304, obviously 300 is a big round number. Before that, it sits around there. So here it's still relatively well bid, isn't it? Yesterday we had a good day yesterday, but we're down on open today. Tesla was up yesterday 3.6%. So it's one of the few stocks that rallied very significantly yesterday when everything else fell. So or fell a bit anyway. Yeah, well, he's obviously native of South Africa as well, isn't he? And fascinating character. I read his book that was written about him about 2015, I think it was. He seemed quite a character then, and this is there's lots of things happened since then. So I'd like to see an updated book on Mr. Musk. But anyway, fascinating character. So anyway, from a technical point of view, Tesla. Still looks relatively big to me. I'd like to see that over 305 if it's going to go any higher. But remember, the overall stock markets that's on an hourly basis. We've got the daily basis. Obviously, I'm rebalanced. It's over here now. It needs to move up. So those charts look a bit odd because of the stock split. I was going to finish with the markets, wasn't I? So here, S&P 500, the world's most important stock market, down today. As you said, it's opened down 0.5% or 0.45 of 1%. So it's looking relatively weak, under 4,000. Big support sits at 3,900. We haven't got there yet, but that's a big. If we hold over 3,900, that'll be relatively positive for the S&P 500. But there it is on the end of day basis. You can see the big support area. That's the rally from. Actually, I don't know. That's on the wrong way around. That's a rally from June. That 17% rally. Then we shook out in half the time that it took us to go up. Massive sell-off on Tuesday, 4.5%. Obviously oversold one. You could really argue that clearly. So there may be some upside to go, but we are entering a very weak part of the year. But that was a huge candle on Tuesday. So there we go. I'm going to wrap it up now. If there's no more requests, it doesn't look like it on the US Open, and call it a day. So have a safe trading day, everyone. Friday is Jobs Day tomorrow in Canada. Is that right? Perhaps it isn't. No, it's University of Michigan, the consumer sentiment and inflation, and we've got final readings of inflation for the euro area tomorrow. So inflation, what everybody's talking about at the moment, and it's starting to grip Main Street as well. I read earlier this morning that US mortgage rates, 30-year mortgage rates, we have fixed mortgages or fixed loans for 30 years in the United States, over 6%, the highest they've been since the financial crash of 2008. So 14-year high for mortgage rates. People be starting to feel the pinch of that. And if we go another full 1% next week, we're certainly going three-quarters of 1%. That is going to bite even more. We got the yields, it's short-term, 1 year, 2 year yields at 24, 25-year lows, highs, I should say. So big inversion in the yield curve. It's always caused recession in the future. UK is probably already in recession. US would be in recession technically, but else for the jobs creation. But see if that continues. So anyway, it's all a bit doom and gloomy as we're heading into autumn and the winter time. So take care, everyone. Thanks for your time today. Hope that was useful. We'll see you all again next week. Stay safe, and may the pips be with you. All the best, everyone. Bye-bye.